Good morning. This is Larry Edelson with my Uncommon Wisdom weekly video market update for Thursday, July 28th. Lots of action in the markets. Again, it's all centered around Washington and the debt crisis and Europe's sovereign debt crisis. We are coming down to the wire in Washington with the debt ceiling. I have absolutely no doubt in my mind that they will raise the debt ceiling, probably at the 59th minute of the 11th hour, but they will raise it. The important point here is the long-term implications. How they raise it, what kind of cuts they propose, all of that is merely kicking the can down the road. In the end, the sovereign debt crisis that you're witnessing in Europe and the United States will overwhelm those two economies and change the world entirely, including the monetary system that the world is currently based on. Having said that, let's go right to the gold market. We have seen new record highs in the gold market. Gold is climbing in anticipation and anxious moments regarding the debt ceiling. However, as I mentioned last week, I believe this is a rather big trap in the gold market and in the silver market, and I would not aggressively be buying any positions here. I am fully content with my recommended original core long-term holdings in the gold market, which for Real Wealth subscribers amount to 25% of their liquid net investable assets based on my recommendations, and at far lower prices, as low as $255, around $400, $500, $700, and we added at the last point around $1,100. So we have very nice profits on our gold positions in the Real Wealth Report. Many of you that follow Uncommon Wisdom and are not a member of my Real Wealth Report also have been purchasing gold on my recommendation, and you stand to be profiting very nicely in here. However, I am not going to add any positions here. I don't care if gold goes up to 1650, 1700, 1750 in the short term. I am going to wait for the next solid opportunity, low risk buying opportunity. I would not be surprised at all to see gold move higher in here, and then once the debt ceiling is raised, see a very sharp sell-off in gold that will leave the Johnny-come-latelys and the more gullible investors and traders caught flat-footed. I hope you're not one of them. Now, let's go to silver. Silver, of course, has been moving up as well, not as rapidly as gold, and we do I do see some very strong resistance coming in at the $42 level in silver. We could get up to around 42, 42.50 in silver, but then I see another leg down. The downside is not complete in silver. I repeat, it is not complete in silver. And don't kid yourself any other way, and don't let anyone else fool you. The downside in silver is not complete. We will see 30, even $28, possibly even lower. And silver is a violent, dangerous market. Personally, I have nothing to do with silver at this point. I would not recommend anybody be invested in silver other than very short-term moves, and if you're able to watch this market very closely or with very close professional guidance. Let's take a look at the dollar here. The dollar is absolutely miserable. We are seeing the dollar approach the May lows. The dollar is a whisker away from record lows. The dollar's pathetic performance is telling you that it is still in a long-term bear market, that raising the debt ceiling or not raising the debt ceiling, the dollar is in trouble. And we are going to see, again, I repeat, because I'm one of the original people in the world to have forecast this a long time ago, the US dollar will lose its reserve status by the end of 2012. The dollar is at record lows right now against the Swiss franc, at near record lows against the Aussie and the Canadian dollar, and it's absolutely, of course, it's at record lows against gold. It is absolutely performing miserably. The only currency that the dollar might be gaining against occasionally is the euro. all other currencies, virtually all other currencies, especially the Asian currencies and the Swiss franc, are soaring against the dollar. Now let's take a look at the Dow Industrials. Dow Industrials, again, as I mentioned last week, it's showing you subtle signs of its long-term strength, which is basically forming on the back of a reflation type of situation and dollar weakness. As the dollar goes down over the long term and loses purchasing power, stocks will reprice in general higher to reflect the loss of purchasing power in the dollar, just like gold has. Stocks can be monetized higher. In the short term, however, we're going to see continued wild moves. I cannot rule out a move down to 11.5, perhaps even a little bit lower. But long term, as I have mentioned several times, I am very bullish on the stock market, expecting to see well over 20,000 in the years to come. Now, that doesn't mean every stock will double and triple in the years to come. Quite to the contrary, it will mostly be large cap, multinational companies in the United States that will benefit in the years ahead. Number one, because of their international diversification, and number two, because they have more solid balance sheets and earnings than most other companies, and indeed better than the U.S. government itself. Also, a lot of money is going to be coming out of the U.S. bond markets, and it's going to have to go somewhere. It's not all going to go into gold. It's not all going to go into natural resources. It's going to go into blue chip type stocks that offer good earnings, good dividends, and good prospects for the future, and are making a lot of their money in the Asian economies, which is where the world's growth is now and for the next several decades. This is Larry. Stay tuned. Have a good weekend. I'll talk to you Monday in my Uncommon Wisdom column, and next Thursday, of course, in my next weekly video.